Hello everybody, welcome to TraderMerlin Show. It is your Thursday edition. It's my Friday. It's your Thursday. For those of you who don't know, I will be taking off tomorrow and Monday as I head to Beantown, Boston. If you have any great Boston recommendations, let me know. I would love to check those out. Restaurants are a little challenging right now, but I'm sure there's some sites. So I will have a glass of, I don't know what I'm drinking today, but a nice little glass of whiskey for you guys. Cheers to everybody for my Friday. I love myself a nice glass of whiskey. All right, cool. Yesterday we had, obviously, Dwight Traderman on the program. A little bit of financial market satire, but also there's some truth behind a lot of what was said on yesterday's show. Today is going to be different. We're actually going to dive straight into the FX markets. We have a gentleman on the program. He was on, I think, about a month ago, who was, they call him the Texas Trader. It's Walker Anglin talking global currency markets. Walker, good to have you with us again. How you doing?
Merlin, thank you. It's good to be back.
Yes. Love having you on the program, man. I think last time we probably could have done like an hour and a half show. So we'll keep it at under an hour. I know my fans love it to be an hour show. I'm shooting for 45 minutes. That's going to be my target for today. So what's new in your world, my friend? I know you've been doing tons of webinars and you do a newsletter and all kinds of stuff. So what's new in your world?
Yes, I've been the self-prescribed hardest working man in Forex. I think we did something like 12 webinars last month, and that's been keeping me busy.
Yeah, 12 webinars, and just so that people know, because sometimes, when you think of a webinar, you're thinking it's just a sales pitch and someone's selling you something. You are giving tons of information. They're all different. It's not like it's the same webinar done 12 times. So just want to clear that one up.
That's right. I try to cover a variety of different topics, and I think somebody asked about relative strength, and that's a topic we covered last night.
Yeah, I'll read it just so you can direct them to it. Jorge is one of our group members here. He says, Merlin, I believe you've had Mr. Anglin as a guest today. He was my OTA instructor. Can one of you tell me how to find relative strength for currencies? It seems that Oanda does not have that anymore. So, maybe you can give a little Cliff Note version of that webinar you did.
Sure, absolutely. In short, Jorge, what we do is just compare the strongest and weakest currencies on a daily rate of change. So we look at percentages relative to the dollar.
He was my OTA instructor.
Can one of you tell the strongest and weakest pairs for the session?
Now, do you look at kind of all those? Sorry, guys, there's a little audio blip that just happened right there. Are you looking at specific things? For example, or do you line them up just dollar against dollar? Are you looking for any cross pairs just to see relative strength? Does it matter? Or you just kind of throw them all on?
See, that's a good question. And for me, I think the dollar unlocks the Forex world. And again, when you have me on, it seems like dollar, but I'm a firm believer that the dollar is the key to everything foreign exchange. So for relative strength, the first thing I'll do is compare each of the major currencies against the buck, and then go back and compare them against each other.
Mm-hmm. Are you looking for percentage gains or just relative against each other?
Oh, it's always a percentage gain, right? And I think this is overlooked, but it's definitely important because pips doesn't tell you the whole story, right?
Right.
Again, 100 pip move for the South African rand is much different than a 100 pip move for the Euro USD.
All right, I do something similar. There's a lot of different resources out there for those that are interested. Is it MRCI or MCR? I think it's MRCI.com has a good one where it's just a big table so you can see those relationships. And I'm sure you have other resources. Are you using a specific software for those relationships?
It's not software. I use the forexfactory.com website. Call me old school. If it's not broke, don't fix it. And I've been using that site since they first put it up on the net, it seems like.
The one other question that came out of that is the webinars. I think, who was it? Susan saying they're available on OTA. No, they're not on OTA. These are just something that Walker is doing on his own. Do you archive those? Do you have like a database where people can get to those?
Oh, absolutely. And what I try to do is have a variety of different topics. I'll hold them directly on our Facebook group, and you can go back and see them there. But I archive everything. So there's literally now, 10, 15 a month for the last 4 months. So I'd say there's about 40 or 50 in the archive now.
I'm curious to know any of our members. Anybody in here watching some of those? I've set in a couple of them, and they're pretty good. It's always nice to pick someone's brain like Walker, especially someone who's been entrenched in the Forex markets for as long as he has been. It's not that you get tunnel vision. It's just that that's your area of expertise. And I think the good thing from this, Walker, is you don't take offense to this, but you're a geek. You're an absolute geek nerd about the financial market. I am too. So I take that as a badge of honor if someone calls me a financial market geek. So welcome to the club, my friend.
No, I was going to say, I actually take that as a form of flattery. And if I was watching markets, I don't know what else I would be doing with my time. So yes, call me a financial geek, sure. Guilty as charged.
Let's start off with the dollar if you want to start breaking down some of these charts, because I know we've got a ton of stuff to look at. I think I actually had a question. Let me bring up the question here and just make sure I can see. Where was the dollar one? Heather sent this one in, so they're kind of out of order on my list. But Heather says, please have Walker give his analysis of the dollar. And I think that that's probably a great place to start, seeing as how the dollar has been the topic du jour. We were on this aggressive sell-off. It started to slow, and all of a sudden people are going, hey, wait a minute. Is there some optimism on my greenback? So what's your take on that dollar?
Well, the dollar, I wouldn't get too carried away with the optimism. And one of the things I like to do is always start with the big picture on the buck. Remember, the dollar is the gateway, the foreign exchange market. And what people don't realize is we're actually in a large decade down cycle for the buck that started back in 2017. My suggestion is to open a monthly chart on the DXY, and you can see that peak in 2017 that goes all the way back to the 2008 low. So you've got that nice 8 or 9 year gap from low to high. So if this cycle continues, we're looking for the next 8 or 9 years to be potentially down. Now, I get that that is a huge outlook on the market, but typically it takes these cycles 2 to 3 years to start to warm up and really get running. Case in point, if you go back another 10 years, you could go to the 2002 high and see that run down to the next low. So for me, I'm not too overly optimistic. If we crack underneath the 2018 low, we could see nearly a 20 to 25% decline on the buck. So yes, hey, great. We've seen some prop up in the dollar over the course of the last 2 weeks. But on the big picture, this is definitely a cycle down for me over the next few years.
Wow. Okay, cool. I want to dive deeper into that because, I'm certainly someone who's much more active. There's no way in hell you'll ever catch me holding, let's say the Euro USD for a 5 or 6 year period. I mean, if I get into like a month or two, it's like, God, this trade's taking forever for me. So, how do you break apart that? Because I know a lot of my viewers are looking at that going, wow, a 10-year cycle, that's sure. I'm not making that trade. How do you factor that into maybe someone who's going to be more active trading?
Well, here's the thing. It's kind of like finding a lane on the highway. I mean, it's not like you're going to be taking I-10 all the way from Texas out to the California coast, okay? But you get the general direction that traffic is running, and you certainly fight the traffic at your peril. Now, for me, no, I don't fully intend to hold trades for the next decade. Most of my work is done on swing-based charts like a 4-hour. But when you start looking at the raw percentages, I just start doing a little math, and I say, the dollar could go down about 20 to 25%. That could mean that the euro dollar could easily end up somewhere in the 148 to 150 area. So what this does is give me a starting point now at 118, and it gives me an end point somewhere in the future. And it's up to me to pick the swings in between to maximize my profit between A and B.
Nice. Let's go. I'm going to bring up that dollar again. I just switched it over to the Euro USD, but let's go to dollar sign DXY. With that, I'm curious to know what you look at. And the reason I ask this is there are some people that let macroeconomics drive their FX trades. There's others who just say, screw all of that. I'm just looking at a price chart, and I don't care anything about that fundamental data. my assumption is going to be that you're somewhere in the middle there, right? How would you absorb, I guess, macroeconomic data? And the reason for that is Joseph says, does the debt levels in the U.S. make you believe that this dollar is going to continue to the downside?
Yes, that's part of the equation. And I want to be a well-rounded trader. I want to look at all of the information in front of me. And I'm not trying to disparage fundamental traders only or price action traders only, but we should have a clear understanding of both, in my opinion. And you caught me. Yes, I geek out on price charts and the analytics from the economic reports that are released from the Bureau Statistics and also from the Fed. For me, the biggest thing right now was the Jackson Hole statements coming out from Jerome Powell at the Fed. And he said that they could be accommodated for the next 10 to 15 years with virtually 0% interest rates. And that's going to be the big story for us.
Yeah, and when you say something like that, when you say accommodative, that basically means we're going to push that dollar down as much as possible, right? I mean, that's essentially what accommodative means.
No, that's exactly it. And here's the thing. Again, if you're price action only, that's fine. But you don't want to fight the biggest, baddest bank on the planet. That is the Federal Reserve. They have the cash, they've got the credit, and they've got the assets to knock anybody's lights out.
Yeah, and we've seen that. I think I have a couple of black eyes right now from what the S&P did from June and July. It's like, oh man, I'm just recovering from that one. All right, well that's interesting because I actually I'm more bullish on the dollar, believe it or not, just because I feel like the equity markets are going to get overheated if that starts to sell off. That's generally bullish on the dollar, but we can make arguments for either one. What I liked is you mentioned these cycles, and I think that this is something that maybe we can spend a couple minutes talking about. When I was learning Forex many years ago, my mentor was talking about these grand cycles and how currencies are run in like a 10-year cycle. How does that factor in? Because I know we've got this chart here, and you guys can see that sell-off he's talking about from 2002 all the way to those lows in 2008. That was 80 months. I mean, that's a 7-year stretch right there. You got 2008 all the way to 2017. You're almost 10 years there. Now is this going to be that next down cycle? And I mean, it sounds like that's factoring in your decision, but how strongly or firmly do you hold on to those massive cycles, like 10 years?
I tend to lean on them pretty heavily, especially when it couples well with what the Fed is saying. So we think the dollar may be cycling down. We say that the Fed may be accommodated for the next 10 years. So the fundamentals and the technicals really start to line up. Now, again, if you're holding your trade for 5 minutes, hey, all bets are off, right? But what you can do is, again, find some key levels, look at some round figures as well, and time some well-placed entries out there on pretty much any dollar pair.
Yeah, definitely. Richard says, but the inflation number will now be able to rise above the 2% target. So will Powell's statement really lead to a weaker long-term dollar? Well, Richard, if they're going to be accommodative, that means more printing and making sure that everything is covered. You don't want any corporate debt falling apart, municipalities or mortgage-backed securities falling apart. And, we could see a housing issue here in another couple of years. That means the Fed will probably bail that one out as well. Again, what that does is it continues to print money to fund all these operations. That printing dilutes the value of the dollar. So it will, just by natural market forces of supply and demand, push the dollar lower if the Fed continues to be accommodative. So, yes, even though we get an inflation target of 2%, we'll still be pushing that dollar down. Or I say the Fed will still be pushing that dollar down. Let's see. I'm going to switch over here. We can look at a lot of dollar stuff, but I got some more questions. Sure. I'll make sure we get through all these. I had like 3 questions that came in last night. Ian says, I like the uptrend on the pound and want to buy in. Where do you see this current sell-off going? Yeah, by the way, we saw a pretty aggressive sell-off in the British pound. Not just that, but it happened on a shooting star for those of you who are candle formation freaks like me. GBP USD was the topic for Ian. I'll go to a daily.d. And there you guys can see that not only did we have a shooting star about 6 days ago, but it came right up into an area of supply. I mean, that's about as pretty as it gets, and it's done nothing but tank ever since. And I don't really see any super strong demand zones down there. I'm curious what you see on this one, Walker.
Well, one thing that I was looking at was on the 4-hour swing chart. And this was the drop from 130. You can see it peaked up into a nice area of supply before it started to roll over in the last 2 days. Mm-hmm. And what I'm looking at is at least a test of a lower channel line near 126. So by no means is this through yet. And you've got to be wary because we have the Bank of England. I know we're talking a lot of central banks, but Bank of England's coming out on Thursday with their interest rate announcement. And to be quite honest, you think things are rough here in the United States. The news has been basically all bad coming out of the UK, and I don't expect good things to transpire with the BOE statement on Thursday.
Yeah, well, that will be an interesting one. This has been a pair that most people that I know in the trading world are bullish on. I mean, if we switch this to a daily, guys, you can see that those March lows, it's just been pretty strong. I mean, this has been the most aggressive down move we've seen in the better part of 4 or 5 months. You obviously that COVID sell-off back in March, but this has been the strongest sell-off going on here, and I think that has obviously a bit to do with the optimism for the USD. How does Brexit factor into this one for you?
It's still playing a role, and it's funny. I can't even keep up with how many years it's been now. Has it been 5 or 6 years since Brexit's
2016, right? Yeah, it's I think it was 16. God, it seems like forever.
Yeah, who knows? But at this point, it's just another thorn in the side of England, and that's my personal opinion. That the longer that this stretches out, the worse it's going to be. Again, if it was for me, the election happened, rip the tape off, and just let the chips fall where they may. But the more that Brexit is stretched out, the worse it's going to be for the UK.
Mm-hmm. Naum, you asked, is it going lower? And Joseph also says I have a demand zone at 127.594. Yeah, I like your demand zone. I see that one. The only problem is I would love to have seen some like red candles in there on that 127 mark. The level I'm looking at is a little bit lower than that 126 handle, so it's great because we have 3 different levels from 3 different people. 125.50 is probably like my target. Is it going lower? I mean, hell, who knows? But right now, I think we could all agree that there's some significant pain and panic going on in British pound. Until something stops that momentum, it's going lower, and I think we could put those 3 lines that we've all mentioned on this program today. There's the 3 lines that have come up, and I think any one of those could bring in a turning point in this. Is your bias to bearish for right now on the British pound?
Yes, until proven otherwise. And I want to see a good confirm. I want to see prices bounce. I preferably want to see some positive news on Thursday if that is the case. But yeah, there's no denying for the last few days, it's been just a straight burn for the pound, just going straight down from that 134 mark all the way to present levels at 128.
Well, for my friend who's traveling through Europe, right, she's actually in London right now for her first time ever. This is probably the best news she could have, right? Just come on, pound tank. Let's go to parity. Let's go to parity while she's there. All right, that's British pound. Again, guys, if you have currency pairs or something you want us to check out, let us know. Just type it on in the chat, and we will go through that one. We got Walker England joining us today. Again, if you want more information from Walker, you can email him. It's wenglandfx@gmail.com. Of course, he's on Facebook with a ton of free content out there for you. Some great stuff. All right, next question I had. So let's see. I had 3 today. We got Ian's out of the way, which is on the pound. Sure. Heather was asking about the U.S. dollar, and where was the first one, or the final one? Oh, okay. This one was kind of interesting. I'll share it with the viewers out at home so you guys can read along with me. Do you ever just abandon a currency pair? He says, I'm about to drop the yen. It's dead. And that's from Connor. Kind of funny the way you worded that one, Connor, but let's bring up USD JPY, which, is a perennial favorite. I mean, people love the yen. Well, I could see what he's talking about. We've had the last couple months have just been snooze fest consolidation. What do you do here?
Well, it's okay to drop currency pairs. And at the end of the day, why are we traders? We're here to make money. And if a currency pair isn't making you money, hey, get rid of it, okay? There's no shame in saying, I don't trade JPY pairs. I personally don't trade Swiss pairs, even if the opportunity is great. Again, every trader's kind of got their bias. So first, to scrap the yen, that's absolutely okay. But the reason why you're seeing this consolidation in the yen, again, I know this is the theme, but it's the central bank. The Bank of Japan is defending this 105 mark like it's going out of style. And they've been doing it back since, 2019. or 2018 is when they really started to defend 105. When you start seeing correlating pressures on the yen, such as a declining stock market, well, typically the JPY is going to appreciate as those funds are repatriated back home out of the U.S. stock indice. But that puts pressure on the yen. The Bank of Japan wants a cheap yen for export reasons. So they actually have to go in and manipulate their currency by buying dollars and selling yen. And the activity and the consolidation you're seeing at present levels are just the Bank of Japan trying to sit there and float their currency and hold it up over that 105 mark.
Interesting. There is obviously, you said the M word, we're talking about manipulation out there because it doesn't happen in the financial markets, guys. It happens all the time. I would change my conversation a little bit with that. I don't know if I would say for who was the gentleman, for Connor, I would never say abandon a currency pair or abandon a stock unless that security has kicked your butt so many times and you can't beat it, then dump it. Like for me, Apple, right? I told you back in 2001, Apple for 1998 to 2000 and 2001 just seemed to kick my butt every time I traded it. And I kept revenge trading it. And finally I just said, you know what? I've had it. I'm dumping that one. I'll never trade it again. Just because the yen looks like this right now and is really showing some consolidation, don't dump it. Just don't trade it right now. Find something that's moving. And, there's simple rules you could do here with this Japanese yen. And I'll draw it on the screen here. You guys can see I drew a kind of a symmetrical triangle showing you it's making higher lows and lower highs. It's the calm before the storm. We do know that the yen's going to have a breakout. Now, I love what Walker just said, because if the yen's going to have a breakout and the Bank of Japan is holding 105, where's the higher probability of this breakout going? To the upside. Hello, riddle me this. Special. So what you could do is very simply go to this, I bring up the Japanese yen here. I'll take this symmetrical triangle lines off, and I'll just say, all right, it hasn't done squat above 107. So if it breaks 107, set an alert and say, I'm interested in going long. And if it gets down below 105, then maybe that's your interest in going short. But it seems like, central bank's trying to stop it here. Just wait. So don't abandon a pair or a currency or a market just because it's flat and not doing anything. Keep it on your radar, especially if it's something that you traded in the past and you're doing well with it, right? It will come back. It's like, to me, it's like waves of the ocean, right? There's certain times a day where you go to the beach out here in California. That's where we have the water. That's where the shores meet the ocean. You go out there certain times a day and there's not a surfer out there. Why? Because they know the waves are crap and they're not going to waste their time. There's other days you go out there and the waves are great and it's packed with surfers. You just got to pick your time to go and ride those waves. Right now, the Japanese yen is a flat ocean. I'd leave it alone.
No, I think those are wise words. Again, there is other currencies out there in the proverbial ocean. You can look for things that are moving, set an alert, see the breakout, get in and take it for a ride.
And I'll give you an example here, Connor. If you look at the USD JPY, it's flat. There's nobody here could look at this chart, especially over the last month, and say that it's really doing anything exciting. It's flat. But you can go to, how about we check out the Aussie dollar? Look at that over the same period of time. You're on a big uptrend. Okay, buy it. Join that uptrend. You've got a bunch of currencies that are moving, so just focus your attention on the ones that are going to give you a higher probability of making money. Right now, the yen is not high probability. All right, more questions. Good. Joseph says, love your opinion on trading the spot Forex market versus the futures currency market.
Okay, as far as that's concerned, pick your poison. And they're basically cousins to each other, okay? And you can't go wrong with either asset, trading the futures or trading the spot market. Now, as far as the different options are concerned, you're going to get a wider variety of currency pairs trading spot. But again, if you're already trading futures anyway on, say, maybe you're trading gold or some of the ag seasonals right now, then sure, yeah, go ahead and bring up Euro futures. You can get a very similar juice to squeeze, if you will. So either or, not really biased one way or the other.
Yeah, I'm not biased, but I think, we have to run kind of pros and cons to each one, Joseph, and that's the challenge. The to me, one of the big drawbacks of the spot Forex market is you don't have a centralized exchange, right? So whatever brokerage firm you're trading on could have different pricing than others, and generally when you're trading with an FX broker, you're trading against their account, you're trading against them. So that to me is a little iffy. I've had some really weird fills and some, I'm questioning going, it never even got there. So I got them on the phone like, oh, that's the average price, blah, blah. I'm like, okay, I don't trust it. If you look at the future side of things, you have a centralized exchange, so it's going to be a little bit better with regards to slippage and transparency. What's great about spot Forex market, obviously, is the leverage. If you're in the U.S., you're looking 50 to 1. If you're European or around the world, you might get up to 500 or more to 1. Careful, that is a absolute double-edged sword. You're like, oh, I can make money 500 times as fast. Yeah, you can lose it too, and most beginners lose. So careful with that one. I actually prefer the futures, and the only reason that I prefer futures now is because in one futures account, I can trade interest rate products, I can trade commodities, I can trade indexes, I can trade currency. So I have a little bit more flexibility with what I can trade. But the spot Forex market, if you want to trade that one, that's fine as well.
Why not both?
Well, there you go. A little bit of each. I have accounts in every asset class out there. Let's see. Raj Want says, does Walker use commitment of traders data for Forex swing trades? Does it provide any edge?
This is a great question, and I was just talking about this prior to the show as far as the difference between the commitment of traders reports and the sentiment data that is put out from each of these FX brokers. And to be honest, I use both, okay, but I use them for different purposes. As far as the commitment of traders is concerned, you see the big commercials. You also have the non-reportables, which I'm looking at a bias between the two to see where the big money is falling every week and where the odd lots are placing their money. So yes, that's going to be a good one, right? Because you always want to be on the side of the large order flow. Now, on a retail level, this is, again, one of the positives of having these retail Forex brokers out there is they all produce sentiment data, which opens up their client book, and we see whether people are buying or selling. Now, why is that powerful? Well, here in the United States and in the UK, many of the brokers actually have to report how many of their clients are net profitable. Mm-hmm. And again, everybody is different, but I would say on average between 70 to 80% of clients at these major retail firms report losing money during any given month. So if 70 to 80% of people are wrong and 70 to 80% of people are selling the euro, well, maybe I want to start positioning myself on the buy side of things. Yeah. So both COT and retail sentiment, both very powerful tools.
It's funny. I've had a couple of guests in the program talking about retail sentiment, and there's a lot of sources out there where you can go and see who's holding what and what percentage of their clients are long or short something. And I've actually been following that. When you get those really big pendulum swings, like 90% people are short the equity markets, you're like, gee, I wonder if it's gonna be an up day tomorrow. And sure enough, you see it rally over the next couple of days. So there you guys go. You got questions? Keep them on coming. Now, you mentioned, we talked a little about the dollar. We looked at the British pound for a little bit there. Is there any other currency pairs that are noteworthy you want to talk about? Maybe euro or some dollars or other crosses?
Well, the thing is, we have to couple, again, our strongest and weakest currencies, going back to George's concern. For me, right now, I'm looking at pound crosses due to its weakness. So one thing to consider is pound CAD, pound Kiwi, pound Aussie, pound against any of those commodity currencies have definitely been strong. And one chart that we've been watching in my weekly FX report is the pound CAD.
Yep.
And it has been absolutely sliding to the downside to the point that it's off nearly 600 pips for the month, and we're only in the second trading week. So if the pound continues to cycle lower, look for commodity FX to lead the way against the GBP.
Yeah, I've got that British pound Canadian dollar just tanking right now. And, we've seen this on the British pound as well with the USD. So obviously some weakness going on with the British pound. Do you look at this and just kind of eyeball and say, 168 looks like a good buy point since we're so darn close to it? Or is it, how are you selecting the trades that you're entering?
For me, I'm sticking with this downtrend. I'm not really a top or bottom picker.
Okay.
In my opinion, that gets you more trouble than it's worth. Yeah, if you can pick it, it's definitely going to pay off. But when something's down 600 pips, it's not something that screams a buy to me. And it's just a matter of self-preservation, right? When that knife is dropping, you don't try to reach out there and grab it. So for me, you got to patiently wait for the market to retrace and then look to re-enter with the overall trend.
Yep. Yeah, just some different perspectives on it. I actually do like catching falling knives, I will say. But the key is you're not just catching it because it's falling, right? There has to be a spot where you go, look. And in this case, on the British pound CAD, I don't see a really strong demand level at 168. It's not that great. But if there was a great demand level, I would actually probably be inclined to go ahead and take that, because I'm all right catching falling knives, especially after a move like it's had, because what that reflects is panic on the part of the investors out there. And as you guys can see, that is a pretty sharp slide. I'm sure a lot of 3.8% for a currency may not seem like a lot, right? You see Apple or Tesla move 3% a day, it's no big deal. But for a currency, remember, currencies are based off entire economies, right? This is huge to have a 3.8% drop in just 10 days for the British pound. Actually, I think it's over that if we go to the low here. I'll drag it to the bottom. You're about 4.2% in 9 days. It's bouncing up a little bit right now. There we go. Joseph says, no crypto for you. Are you not a crypto guy? Don't trade any cryptocurrencies?
I'm more of a buy and hold camp for crypto.
Okay, but you're in it. I didn't think you'd be in it.
It's one of those things where I've got one of those nice little Ledger Nano wallets and just have it tucked away to the side. But it's more out of curiosity and more of just personal interest than sitting there trying to pick tops and bottoms and things like that.
You know, it's interesting, especially for someone who's an FX guy. I would kind of imagine that you'd be interested in it because it's digital currency, right? And depending on which ones you're using. So yeah, that's kind of how I got into it too. It just totally piqued my interest, and I thought, you know what, I'll have to check this out a little bit more. And now I'm knee deep in cryptos and I can't get out. I'm stuck. I love it. All right, tell me about your newsletter. I have your email on the screen here. For those who might be listening to the podcast, I'll read it again. It's Wengland, WENGLANDFX@gmail.com. Is that the easiest way for people to get your newsletter? And tell me a little about your newsletter, since it's free, right? I'm assuming it's all free. I think you sent it to me, so it's got to be free.
Yes, absolutely. It's a free newsletter that I push out once a week, typically on Tuesdays. And what I do is just go in and cover the broader fundamental picture, and then I divide the market out, and I discuss the top two dollar pairs, yen pairs, and then I'll talk about one currency cross. So anybody that's interested, again, it's absolutely free. Send me an email. I will get you on the mailing list. I'll send you last week's copy, and I'll make sure you're on board for the next one.
Yeah, and definitely check out the Facebook, guys. He does a lot of different webinars, and I know that many of you here are information hounds. You're just hungry for more stuff, and Walker puts out some really good content out there. Let's see. Rajwan says, so if you want to join the downtrend on the British pound CAD, how and where would you join? Okay, well, we've got the chart up there, so we can just talk about that one right now on British pound CAD. This one's a bit challenging because it's been so aggressive. If you're using traditional supply and demand, you can't just do it off the daily, right? You're going to have to look at someplace else.
Yes, I agree. If you're waiting for a retracement, you're going to be waiting. If you're waiting for the next breakout, well, you're doing just that, waiting. This one is a hard call. And just to kind of put it in perspective, right? When you see something like Tesla stock just shooting straight up and it's gone up so high, so far, so fast, well, you don't want to be buying the high because, again, you turn around and it may crash 20, 25% like it did the other day, okay? So for me, this one, if you're not already in it, you're going to have to be patient. And it's going to either be a retracement for me somewhere around the 70, 75 mark, or you're going to have to wait for a bigger breakout underneath that previous June low at 67.60 and change.
Actually, I was on Tesla chart here. GBP, give me those numbers again, just so we can check it out.
Oh, sure. The previous low in June, so it's going to be the daily breakout if you want to wait for the bigger breakout lower under 67.60. or wait for a retracement back to that 70, 75 level. And again, you can swing that on some lower time frames like a 1 hour or even a 4 hour chart. You've got that nice consolidation there. Pound CAD 4 hour.
Yep, bring up the 4 hour right now. Just was putting them lined on the screen. Yeah, sure. And there you go. And you guys can see that there really aren't too many opportunities here that are great. Getting up that 171 mark starts to get a little bit better, but that's how you would do it. Is you're just waiting for that market to come back up to one of these areas, and that's how you do it, Rajwant. All right. Batanai says, how do you keep up with a whole lot of currency pairs? Do you use alerts? And I think that this is one of the beauties of the currency markets is there's not thousands of securities to choose from. You're not. I'm sorry for my friend Gayer who might be with us today. You're not trading probably the British pound, South African rand. That's not a common one. So how do you keep track of it all?
Oh, first I actually looked at the pound ZAR chart just in case he showed up and asked a question about it today.
That's funny.
I remember that from the last show, but all in all, I only look at about 20 to 25 currency pairs. Now, as far as picking which ones I want to trade, well, I try to narrow it down to 3 or 4 per day. So it's just practice of identifying what's moving. And Merlin brings up a good point on the yen pairs. If the dollar yen's not moving, well, why do I have to go in and analyze it? I look at my percentage changes, say dollar yen's flat. The pound CAD is on the move, so which one do I start drawing up? So through the process of elimination, you can cut 20 pairs down to 2 or 3 pretty quick.
Mm-hmm. And you have your favorites. I mean, you have certain ones that you look at and you go, yeah, this is I like trading this one. I have best success with this one. You kind of, you get your feel for the vibe of that currency pair.
Absolutely. And as you can tell, I'm definitely a dollar guy. Most of my work is going to be on dollar pairs and cross pairs. And I just trade yen pairs in passing if there's a setup that's too good that I can't miss.
Nice. All right, Walker. Well, thanks for coming on. I'm going to try to get you on more frequently. It's tough because you do so many things. I do appreciate taking time on. So for viewers, I've got his email on your screen right now. For the podcasters, it's wenglandfx@gmail.com to get more information on his newsletter, which is totally free. You'll get a bunch of webinar stuff as well. He's also on Facebook where he puts out a ton of content, great content, I might add. So Walker, thank you so much for coming on today. I appreciate it, my friend.
Merlin, always a pleasure. Thanks for having me on, and let's schedule the next one, okay?
Sounds good. We'll see you soon.
Talk to you soon.
All right, bye-bye. Guys, Walker England, the Texas Trader. You might even have noticed, I actually tried to make him look, I tried to make it look kind of cool here. This logo right here is actually the Texas with the little arrow. That's the Texas Trader logo. Walker England coming to us from Tejas, the great state of Tejas. So, hope you guys enjoyed that one. It's interesting when we look at the way that people trade, when you have, for example, David Warner on, who's looking at just the kind of the quarter psychology, right? And you notice that Walker didn't even talk about that. So I love this because people have different ways that they trade and it works for them. So don't get hung up on someone's routine. Find out what works best for you, what resonates with you, and that's why I like bringing Walker on. I think Walker's got maybe lines up a little more with core strategy because it's about supply and demand zones, whereas David's saying this is just whole number, high-level psychology in marketplaces, and I'm going off those big numbers, which works as well. I find that to be very beneficial. Okay, I had to do something here as a treat for Larry. As you guys know, part of the show yesterday was me mocking an individual who I despise with all my soul, who I think is an absolute shyster. And basically the guy will just call out tons of levels, and he calls so many levels you forget what he's called, and then a couple days later, weeks later, or months later, he'll show you something that actually that worked, it followed through, and he'll say he took the trade but never show you any live proof, and he never trades live in front of anybody. I like people who call out trades beforehand. And when Larry Jacobson was on the program the other day, it was kind of cool because he set this chart up, right? This was the chart that he sent us, right? Looking at these demand zones, and they were not hit yet. You can go back to last Thursday, they were not hit. This is the beauty of it, right? They came right back down into those demand zones. This is both Tesla on the right, Apple on the left, called beforehand, all mapped out, and I just thought this was worthwhile because, he called out both of them. And I think we all kind of felt they were overdue for a little bit of a bounce after an aggressive sell-off, right into a demand zone on both of these. So thanks, Larry, for sharing that with me, and I just had to share with the audience. So let me go, let me see if I get rid of that one because I do believe I had another PowerPoint here somewhere. No, we won't save that one. Okay, so let's go back to this one here. The king of unfilled orders. Yes, the king of unfilled orders. So let me go through just for tomorrow, or for what's going on. So obviously you guys know I will be gone tomorrow. But he nailed those. Yes, he did. I loved it. You know, it's good because I love that Larry's transparent. He'll say stuff, and if it doesn't work, he'll own it. He'll accept it. It didn't work. Yeah, but he's been doing really, really well. I've been watching a lot of stuff he's doing on the options sessions on Friday, which I would encourage you guys to check out. He's got just a really cool strategy he's implementing. I'm gone tomorrow, so this is my Friday show. So again, cheers. That glass of whiskey is now officially gone. I will also be gone Monday, so I have some catching up to do. Not really a lot with earnings. Oracle came out today, and they blew out earnings. You do have some announcements happening next week, but it's like one or two announcements on earnings that it's not really that important. So here's what's happening for tomorrow, just for those of you who want to pay attention to it. We do have CPI numbers coming out tomorrow, 1 hour before markets open. And again, that's inflationary stuff. They're expecting the inflation numbers to drop. And I gotta just say, how the hell is this possible? I told you about my supercuts experience. I know, my sideburns are still not even. I'll have to trim those ones up, but I mean, that jumped 25%. I'm looking at restaurants across the board absolutely vaulting their prices to the upside. Groceries have increased a little bit, but they're saying inflation's running at 0.6% and they're expecting it to be 0.3%. I'm not buying it. I don't see the consumer price index staying there. To me, this is absolutely manipulated, but hey, they're reporting those numbers tomorrow, 1 hour before market opens. That's your Friday news. Now, of course, we have a nice long weekend. I hope all of you have a fantastic time. Monday brings in nothing really for the U.S. markets. As you guys can see here, not a lot of exciting stuff. You do have claim and count change and unemployment rate for the UK, but other than that, not a lot of really driving pieces. Now, you can look at this next piece. This is for Tuesday. I will be back. There will be a Tuesday show. Now we start to talk about important stuff. That Empire State Manufacturing Index all of a sudden started to drop. I was actually rather optimistic seeing some of those numbers on Empire State Manufacturing Index. Now they dropped 3.7, which is just barely above positive. We also have capacity utilization rate, industrial production for the U.S., as well as import prices. So a busy day, and then a ton of inflationary data for the U.K. later on that night, which we can talk about on the show on Tuesday. So that's it with regards to your economic announcements for the next 3 days. Oh, man. 3 days. Big Eb says those inflation numbers are bogus. I know they're bogus. The hard part is they shouldn't even report them, to be honest. If you're going to give me information that is completely fictitious and doesn't make any sense, then I don't want to see it. They should give us honest, fair, transparent information. Take into account when my orange juice drops from 64 ounces to 58 ounces and don't call that inflation. Come on, that's just crazy. Joseph says, didn't you tell us that September was the worst market month? Yes, I did. Statistic, and it's not that I'm making it up. You can look at all the facts and figures going back into the 1920s. No matter what time period you pick, it's still going to be September's the worst month, and we're off to a pretty rocky start already. Batista says, make sure you wear your Red Sox. Yeah, it's funny. When I was in high school, I was a huge Red Sox fan. Ellis Burks, Mike Greenwell, Wade Boggs. I mean, those guys are some of my favorite players of all time. Fortunately, my loyalty is, they used to call me Mr. B because I'd always wear a Boston hat and jacket on, but I will be a Giants fan, San Francisco Giants fan for life. Bay Area, baby. Yep, going to Boston, but deny. All right, let's see. That's it. I've got it covered. I went over your economic announcements. We talked to Walker Anglin, and I'm actually keeping it right to a 45-minute show. So if you guys have any last-minute questions, I'm going to cut it. I'm going to cut the show early. All right. That'll do it for me, folks. Have a fantastic weekend. I apologize for taking a Friday and a Monday out, but then again, not so much. I'm going to go have a great time on the East Coast. I'll be back to tell you all about it, and hopefully I will see you guys on Tuesday. Have a great weekend. Be safe out there. Enjoy your trades, and I've got some major announcements with regards to central banks next week as well. So we'll see you guys on Tuesday.